Hello, everyone, and welcome. Today, I wanted to talk about the impact of inflation and hyperinflation on the real estate market. I'm originally from Venezuela, and growing up, I seen how inflation was a part of our daily lives. Other countries in South America and Latin America in general have been going through the same. We've seen Brazil, Argentina, Mexico, all these countries, have been stricken by inflation for many, many years. I always wonder why this was happening to a country that has so many resources, has the largest oil reserves in the world, has a lot of minerals like gold and silver, has just a lot of potential, and always wonder why inflation was something that was taking place during all my years that I was born and raised there. So today I wanted to talk about that and how that has affected the real estate values. We know that typically, and as we've seen in South American and Latin American in general countries, whenever there is inflation, which has been taking place for many years, there's also a rise on the real estate values and also the rental market. The IMF, International Monetary Fund, has a very interesting article, and there's a reason why I like to bring him up for this video. Let me just share my screen. They say Latin America hit by one inflationary shock on top of the other. After years of fluctuating around targets, inflation in Latin America's largest economies is the highest it's been in 15 years. Having suffered two major shocks, the impact of the pandemic and the Russia-Ukraine war, as in other emerging markets and advanced economies, inflation accelerated in Brazil, Chile, Colombia, Mexico, and Peru in 2021. They are also blaming the war in Ukraine as another reason for the inflationary shock to the region. And in addition to macroeconomic impact, current higher inflation is regressive, with low-income households suffering a steeper cost of living increase for a region with historically high levels of inequality. The erosion of real incomes due to the soaring cost of food and energy will only add to economic strains faced by vulnerable households in the region. So the reason why I bring the IMF is because I have been reading a book entitled The Creature from Jekyll Island by Edward G. Griffin, which I highly recommend everyone to read. And basically, the IMF has been, or the World Bank has been, an arm of the Federal Reserve Bank. And what we have seen taking place for many years is a transfer of wealth from developed nations to underdeveloped nations, like Latin American countries, which the money necessarily doesn't go to the people, but it goes to buy out politicians down there and corrupt politicians. And what has happened is that they have, with the pretext of trying to diminish poverty, what they have been doing is increasing, basically diminishing the value of their currencies, and therefore increasing inflation. So I just wanted to point this out because I think it's very important to understand that what's taking place now in the United States, as far as the inflationary trend that we're seeing, is caused by the Federal Reserve Bank. And the international version of the game, called bailout, is similar to the domestic version. What is similar to the domestic version is that the overall objective that it has on the taxpayers is to cover the defaulted loans so that interest payments can continue going to the banks. So in respect to the IMF, the World Bank, and the goal has been to eventually have a world bank with a world currency, whether that is going to be some kind of a cryptocurrency or whatever they have in stock. So what the book really does a really good job is explaining how this really has affected all these countries. And basically, the United States is the last place where they will need to bring all these global ideas that they have of one world currency and one global power. The IMF World Bank directs the massive transfer of wealth from industrialized nations to the less developed nations. This ongoing process eventually drains their economies to the point where they will also be in the need of assistance. No longer capable of independent action, they will accept the loss of sovereignty in return for international aid. So the less developed countries, on the other hand, are being brought into the new world order along an entirely different route. Many of these countries are ruled by petty tyrants who care little for their people, except in how to extract more taxes from them without causing a revolt. Loans from the IMF or the World Bank are used primarily to perpetuate themselves and the ruling parties in power, and that is exactly what the IMF World Bank intends. Rhetoric about helping the poor, notwithstanding the true goal of the transfer of wealth disguised as loans, is to control over the leaders of the less developed countries. After these despots get used to the taste of such an unlimited supply of sweet cash, they will never be able to break the habit. They will be content already are content to become little gold-plated cogs in the giant machinery of the world government. Ideology means nothing to them, capitalist, communist, socialist, fascist. What does it matter so long as the money keeps coming? The IMF World Bank literally is buying these countries and using our money to do so. So the answer to my question I really found in this book of why rich and resourceful countries had so much misery. And that is because they had been slowly brought into this new world government. And we're seeing now the end of all of these happening. The recent inclusion of China and the former Soviet bloc on the list of the IMF World Bank recipient countries signals the final phase of the game. Now that Latin America and Africa has been purchased into the New World Order, this is the final frontier. In a relatively short time span, China, Russia, and the Eastern European countries have now become the biggest borrowers, and already they are in areas of their payments. This is where the action will lie in the months ahead. This book was written in the 1990s, and so we have seen how China now is basically a dominant power, and actually they are in Venezuela, and so is Russia, and of course the United States has a power grab down there as well. These countries are, especially Venezuela, has the highest inflation in the world. There is not even called inflation; it's hyperinflation. I think it's 2000 or something extremely high of what their hyperinflation is. They have price controls, they have capital controls. Prior, when we were going through that process of high inflation, what people will do. Of course, people can't have any savings because automatically the currency becomes worthless. But what people will do will be that they would purchase dollars as a safe haven for their currency. And the other method to preserve their currency or their value will be to buy in gold. But I remember back then, what people would do would be to buy dollars, and that would be a way to preserve whatever they had. And today, we're seeing that countries like Argentina and Brazil, and even other countries around the world where they're suffering, which is basically everybody, inflation, they look at the dollar because it's right now, even though it's artificially, but still right now the strongest currency. As the safe haven. For us here in America, it's a little different because we don't really have another currency where we can protect our dollars. So in a way, we see that for us, it's going to be a different challenge, and people are not used to inflation. Inflation is a part of life, and everybody else is in the developing world. And the role of the IMF has been very substantial on making this happen, as all of these countries have basically lost their currency values, and their exports have become extremely cheap, and their imports are very expensive. So how is that going to play out as far as real estate goes? I know in Venezuela, real estate prices are still high, rents are high. People don't make everything. The cost of living is going up, and so is not just food and all the other things, but housing. So how is that going to play out here in the United States with the rise of interest rates? Hiking interest rates have taken place 7 times in 2022, and how that's going to affect whether prices are going to continue to increase. We have seen that there's been a slowdown in sales, but how is that going to affect the values, or is it going to have any effect, inflation, on the values of homes? And I know it has definitely affected demand somewhat, but there is still a very short supply of housing. So let's take a look at some opinions on that. But in Venezuela, basically, and countries like in Venezuela, South America, and Brazil, Argentina, housing definitely is very unaffordable. So depending on whether you might have to move away from the cities and stay in rural areas, might be more affordable, but definitely in the metro areas is definitely something that's a challenge for everyone. So let's take a look and see how that might play out on the coming years for us here in the United States. So what I like to do is share an article by Homelight to see the 5 ways inflation is impacting the 2023 housing market. And so we have been in a seller's market for the last 10 years, and real estate cycles. We're going to cycle into a neutral marketplace. I'm sure in some marketplaces it's going to be a buyer's market, according to this real estate agent. And I have to agree with that. Every market's going to be different. I know here in California is very unaffordable, but we have even seen a decrease in housing values in cities like San Francisco, where prices have decreased by 20%. But even within California, there are certain counties where they have seen appreciation in their real estate prices, like Napa County, which is a neighboring county to San Francisco. And we have seen that still there is a low supply of housing. So the 5 ways inflation is affecting the housing market. Let's take a look. So number 1, home prices could decline. This article says that with living costs skyrocketing, it's natural to think housing prices will keep climbing. However, housing prices smashed records earlier this year. And now as buyers see inflation eating into their wallets, they might start backing away from home sales. We have seen now that the Federal Reserve Bank has pivoted on their interest rates. We have seen a slight decrease, probably like 1/8% in the last few days. And because they see that inflation, according to them, is somewhat under control, even though we know that the effective rate is actually way higher than what they're telling us. We also, so this article says that home values, homes have appreciated at rapid rates in the last few years. And according to Statista's report, house values across all 50 states and DC rose from 2020 to 2021. The same study saw the average appreciation for single-family homes in multiple states spike to more than 27% in a single year. However, as high inflation costs press down on buyers, it could depress home values, although he doesn't expect a major housing market crash. Number 3, mortgage rates should march higher. In order to curb inflation, the Federal Reserve Bank is raising interest rates. This article was written a few months ago. And even though the Federal Reserve Bank doesn't directly determine mortgage rates, its moves often indirectly sway mortgage rates. So construction costs might rise. We have seen that there's definitely, we talk about the green measures, how they have having an effect on construction. And we also talk about how construction materials are scarce and there is not enough supply. And home builders are actually now slowing down their construction. And so this article says when inflation is high, the cost of materials also increase. That means it might become especially expensive for construction teams to build new homes or renovate existing homes. Ultimately, those high costs could spill into the housing market and lift home prices for new builds. The article also talks about housing sales could slow down, and we have seen that. taking place. Houses have been selling at record rates in recent years, but also we have seen that the seller's market for the last 10 years and real estate cycles, we're going to cycle into a neutral marketplace. This is the same comment that we seen earlier. So what did you do if you want to sell your home during a high inflation? You definitely want to make sure that you have a plan, that you know what you're going to do. If you're going to sell your home, is it your primary residence or is it your investment property? Definitely have a plan, because just remember, when you sell, unless you're going to use the cash to buy gold and silver, which is the only tangible asset right now that's holding value somewhat, that you're going to be buying into a real estate market that at a higher interest rate. So all those considerations need to be made prior to making that decision. So overall, I think housing prices are probably going to have some kind of a little bit of a decline in certain markets, maybe a lot. It depends on the market that you're in. And of course, there's several other factors aside from the hiking interest rates that have to do with ordinances and measures from like the green measures that we've been talking about, that has an effect on that. And we've seen, for example, that the commercial real estate has been affected by a lot of these agendas, and some of these commercial real estate, multifamily housing, their debt is going to be actually in need of refinancing this year. A lot of them, this year is the year where they need to refinance, and we have seen that there is being some issues with that. Some landlords are having a real problem with trying to refinance because a lot of times they are unable to meet the lending standards that are set, and so some of them might have to negotiate what they're doing with their lenders. I wanted just to show this article. Veritas $450 million loan default is a sign of things to come. In multifamily market, there is more where we came from. So the default on a $450 million loan by one of San Francisco's biggest apartment landlords could be a sign of things to come, as debt taken out at historically low rates begin to mature, according to market analysts and multifamily agents. The delinquent loan backed by 62 rent-controlled apartment buildings, it's not 62 units, 62 rent-controlled apartment buildings, show that there is a chink in the armor of commercial mortgage-backed security loans for multifamily assets. The multifamily market has been a really strong performer, with rents rising in markets across the country and very few defaults until now. So this is an outlier, he said, of the Veritas default, adding that unlike the Shorenstein Properties $400 million default on the Twitter building, this is, I think, took people by surprise. We have seen, well, the Twitter building is also facing a similar issue, but we're also seeing that these tech giants like Facebook and Google are actually shedding away office space, many thousands of units. They're not going to be renewing their lease to their tenants. So all property sectors across commercial real estate with maturing loans are going to face some level of refinance stress because interest rates have shot up so quickly in such a short amount of time. So we're seeing that there is likely to be a crisis on that front, the multifamily commercial real estate, for that reason. And of course, inflation is playing a role, the rising cost of living. Something else I wanted to point out, that growing up, we used to think of the rising real estate market in terms of the local currency. So bolivars is the local currency that we had, and so we will see that the values were going up with respect of bolivars. But if we translated that in terms of dollars, the the prices weren't going up, or in terms of gold. And we can do the same exchange now and actually look at the historical housing market graphs, and seeing that for the last 40 years, in terms of 50 years, in terms of gold, the housing prices have actually declined in terms of gold. It takes less gold than it did back then to buy a house today than it did then. So, but in terms of dollars, we've seen a huge increase in price. So it depends on what unit of measuring we're using. But if we're using the current currency, that we can see that there's definitely an inflation, because the currency has been losing value. So that's all I have for you today. I hope you found it useful, and please share and like my video, and I hope you can join me next time. Thank you.